Hey you, welcome back to the channel. In today's video, I'll be going over legal ways you can reduce your taxable income. Okay, so listen, I'm just gonna cut straight to the point here. The only way you can cut your taxes is if you quit your job or your business and just stop making money altogether. Just kidding. Actually, please don't do that, like seriously. In all seriousness though, reducing taxable income is something we all want to do, right? And since eliminating your income is clearly not an option, we need to look at the strategies to reduce your taxable income or the income that the IRS views as taxable. So make sure to listen and take some notes on each of the strategies that I mentioned in this video. If you choose to capitalize on these tips, you are going to save thousands of dollars in taxes. In fact, as a CPA, I've helped businesses and individuals save on their taxes through tax planning. With tax planning, I go over the ins and outs of a taxpayer's situation. I review all of their sources of income and major life circumstances and come up with legal ways to save them thousands in taxes. I recently had a tax planning client that was overpaying in taxes by $11,522 annually. I actually ran the numbers and found that if she could pocket that money that she's overpaying in taxes and invest it towards her retirement, she would have at least $1.6 million saved by the time she retires. Now granted, everyone's circumstances are different, and if you want to do things the right and legal way, you must work with a CPA to figure out the best strategies for you, okay? So this is my disclaimer. This video will merely plant seeds of knowledge for you, and then it is up to you what you'll do with this knowledge. Now my hope is that you work with a CPA and implement every single strategy I'm about to outline in this video so you can have more cash here and less going to the sky. Hey there, I'm Crystal, CPA and co-founder of Life Accounting, a full-service accounting firm dedicated to helping small businesses grow by helping them with their accounting, taxes, and finances. If you like what you hear so far, please help me out and like, comment, and subscribe to our channel. It lets us know that you're enjoying our videos. The first tip to reducing your taxable income is to open a retirement account. Perhaps you've heard of an employer 401k, where employers and employees contribute to the employee's 401k account. The employee's contribution is made with pre-tax dollars, meaning before you pay federal and state income taxes, that contribution goes to your 401k account and actually reduces your taxable income. But what if you own your own business or your employer doesn't offer 401ks as a benefit? There is another type of tax advantage retirement account, and that is an individual retirement account or traditional IRA. Self-employed individuals can start a SEP IRA. Both are similar in that you can make contributions to these accounts with pre-tax income. So while you're saving for retirement, something we all should be doing, you are reducing your taxable income in the current year. There is a limit on the amount you can contribute to your 401k or IRA every year. These amounts change slightly year over year, so it's important to verify this every single year so you don't get into any trouble with the IRS. But for 2020, you can contribute up to $19,500 to your 401k and up to $6,000 to your traditional IRA account and up to $57,000 for your SEP IRA account. There are other income and contribution limitations and guidelines that apply to open and fund an IRA account, so make sure you familiarize yourself with those details. But hey, reducing your taxable income by $6,000, $19,000, or $57,000 will also dramatically reduce your taxes owed. This money also grows and compounds tax-free over the years. Disclaimer, you will ultimately have to pay taxes once you withdraw these funds at retirement. However, most people are in a lower tax bracket at retirement and would pay lower taxes compared to when they were actively working. You also can't withdraw funds from these accounts prematurely or prior to age 59 and a half, or you'll be penalized. So just keep this in mind. Tip number 2 for reducing your taxable income is health savings accounts, or HSAs. An HSA is a tax-advantaged medical savings account. The funds you contribute to an HSA are not subject to income taxes and actually reduce your taxable income. A big reason why HSAs exist is to make healthcare costs much more affordable. So for this reason, you have to use the cash in an HSA for medical expenses only. But with the rising costs of healthcare, that shouldn't be too hard to do, especially considering the wide array of expenses you could use your HSA for, such as prescriptions and over-the-counter medications, contact lens, co-pays, vaccines, physical therapy, chiropractor visits, and much, much more. And unlike retirement accounts, when you withdraw money from your HSA and use it on qualified expenses, there aren't any taxes imposed at all, ever. If for any reason you don't utilize all the funds in your HSA, no worries. You can roll it over to the next year. Of course, there are limitations. HSAs are only for those individuals with high deductible health plans, and you can only contribute up to $3,550 in 2020 or $7,100 for families. Now, tip number 3 for reducing your taxable income are municipal bonds. This tip does not necessarily reduce your taxable income, but if you're an investor and looking for another way to invest your cash and diversify your portfolio while also enjoying some tax-exempt earnings, this tip is for you. Municipal bonds are debt securities issued by the state or local governments to fund public projects like roads, bridges, parks, and other infrastructure. So you're basically lending money to the government to fund projects, and they pay you back with interest. These bonds are considered relatively safe and stable, though you should always consider the risk factors of making any investment. The tax advantage of municipal bonds is that you earn interest on your investment that is tax-free. The average yield or return on municipal bonds is around 1.5% to 5%, depending on the bond's maturity date. You can check out Vanguard to see what municipal bonds are available. Tip number 4 for reducing your taxable income. This tip is for my entrepreneurs out there, and that is the home office deduction. If you own your own business or side hustle and work from home, you could possibly take the home office deduction. What makes this write-off so great is that you get to deduct normally personal expenses as business deductions, and therefore lowering your taxable income. The key to this tip is having a space in your home that is regularly and exclusively used for business. If you do have such a space in your home, you could take deductions for your rent and utilities. For homeowners, you can deduct a portion of your mortgage interest. There's 2 ways to come up with the exact amount of this deduction. The first is called the simplified method, where your total home office deduction is $5 for every square foot of office space in your home. So if your home office is 100 square feet, you could deduct $500. That's $5 for every square foot. The second method is the actual expense deduction. Here you would take your total home expenses, rent, utilities, insurance, etc., and apply a rate to determine your deduction. The rate is the percentage of space your home office is compared to your entire home. So if your home office is 250 square feet and your entire home is 1,000 square feet, your home office represents 25% of your home, and you could write off 25% of the appropriate home expenses. What will you do to reduce your taxable income? Will you open a retirement account or HSA? Or how about invest in municipal bonds or utilize the home office deduction? I know. Why don't you comment down below what your favorite strategy is? And while you're there, please do me a favor and like this video and subscribe to our channel. Make sure your post notifications are on so you always know when a new video drops from us. We publish videos weekly, and I guarantee you'll learn valuable financial information. There you have it. I hope you enjoyed this video and will implement some of the strategies I talked about today. Bye for now.